Hey, this is George.
Hey, this is Fred.
And this is Real Talk with George and Fraser. What's going on, brother? How are you?
Not much, man. Everything's good, man. Get ready for the holidays. What about you?
Oh man, same thing. Just trying to wrap it up nicely. I know we have this Christmas show on the 22nd that everybody's looking forward to. So that should
Yeah,
be a good thing. That should set the season off right. But past that, brother, just trying to get through it. I think Christmas is more a holiday for the kids. At some point in time, it's just like what else can I buy myself, or what other gifts, or what do I need? And if whenever I go through that entire process of, oh, I don't need anything, you know, I'm good, you know,
exactly.
I spend more time just enjoying the kids opening their gifts now than anything for me, really.
That is true. That is a joy seeing kid rip open like wow. So that's what I felt like when I was little. When I used to rip my presents, my mom felt the same way I used to do. When I like rip it open, she was in there excited, like, oh my gosh, look what I got.
Yeah, absolutely.
That's the
Well,
best.
listen, we got a great show today, man. We had a good show yesterday. You know, JR stuck with us and saw it through, even through all the internet problems, but it was definitely a very good interview. But this one is going to be even better because we have financial consultant Jay Rowland Jr. will be with us. And this is a great time because 2020 wiped out a lot of people's finances. A lot of people were on unemployment. A lot of investments got lost. A lot of businesses closed. And now we're going into 2021 with quote unquote two possible vaccines. But the real goal is to really map out a strategy for recovery. 3, 6, 9 months. How do you get through the year and actually make it? So I'm pretty excited to talk to Mr. Jay Rowland.
Exactly. Exactly.
Hello, sir. Welcome to Real Talk.
How you doing, brother?
How you doing? How you doing? How's it going, guys?
Doing pretty
Good,
good.
good, brother.
Good.
So,
Everybody, good to see
Thank you
you.
for having me. I appreciate this opportunity.
oh,
It's
our
on.
pleasure. Definitely our pleasure. So let's have the fans. Can you give the fans and the listeners a little bit about your bio and background?
Yes. So basically, as you guys all know, I'm in the credit industry. I repair credit. I have a credit company called Mr. Never Stop Credit Repair. Basically, what I do is remove negative items off clients' credit. In the meanwhile, while I'm removing the negative items, you get what I'm saying? Like I show them how to build it because you can't just fix somebody's credit without building it.
Right.
I've been doing it for the past 3 years. I'm originally from Jersey. I'm 31 years old. I live in Florida. And credit's been everything to me. You know what I'm saying? It helps me get to where I'm at now, and I'm able to help thousands of people throughout, the world, United States, basically fix their credit. Um, I also do, credit classes and things like that. So, this is my first podcast. So, I'm kind of, don't know how it goes. So I'm gonna just go with the rhythm, man. So you just throw them questions at me, and if you want me to just freestyle, let me know how you guys will like it. And I'll explain everything, like what you want me to tell, talk to the viewers about and things like that.
Well,
Okay.
that's good. Because I'm Berlin, New Jersey. Raises full
Yeah.
credit.
Jersey.
Um,
Yeah.
Oh,
I actually
I
wrote a
think
book about
I
credit.
kind of
So
lost you guys. What part you say you from Jersey too?
yeah, I'm
I'm from
from
Florida.
Jersey.
Okay.
He's Florida. He's Jersey. I'm Florida.
Okay.
So
What part of Florida you in?
Miami, baby. You know, all
Okay,
the way
okay,
from
okay,
Miami, baby.
okay, okay. You close to me. We 3 hours apart. I'm in Lakeland, Florida right now.
okay,
Hey,
not
what
bad.
up? Hey, how you doing, buddy?
Okay.
But anyway, like I was saying, I wrote a book about how to use your credit rating to put yourself on the path to debt freedom. So this is
Correct.
going to be a pretty good conversation to see if we can build together, and if
Okay.
some of the things I found in my book and research are definitely applicable. What do you think is the number one plague for people in our community when it comes to credit? Now, is it just not paying the bills, or having the bills come back to haunt them? So, for instance, um, late payments,
Mhm.
not paying a cell phone bill, letting a water bill go too long,
Mhm.
We don't really understand how credit
Mhm.
affects us every day, and it's
Mhm.
even now to the point that even to get a cell phone, because most cell phones are 5, 6, $1,000, they kind of do soft pulls and run your credit to see
Mhm.
if you're credit worthy. So those affect us um, to the point that some and how do you work with our clients said, but how do you how do you make that community? Because we're the one that's economically disadvantaged a majority of the time compared to our counterparts.
So here's the thing, and I'm glad you said that, and that's a strong topic. And today it's kind of sad too that we're in 2020, and a lot of people don't know what credit is. The thing is, we don't know what credit is. Okay, a lot of times is we mislead it. You know what I'm saying? So basically, someone just think like, oh, prime example, I could just add this to my credit, or I could just go to a credit repair company or whatever, and I could wipe all my debt because we don't know the steps. You get what I'm saying? We don't know if we pay late, it's gonna hurt our credit. We don't know that. You know what I'm saying? Because we weren't taught that. I feel like we should have been taught that in school. You know what I'm saying? As far as, hey, this is credit. Credit is basically rent. To me, credit is rent, okay? Because they're giving you a product, right? And they're giving you either a credit card or a car or a home loan, right? That you're making payments over
Hmm.
time, right? All it is payments over time. It's just like rent. So a lot of us already have bad habits, okay? Because it start with our habits, I believe. You know what I'm saying? We already have bad habits. We grow in an environment where we never really have anything. So when we given an opportunity, we take the most of that opportunity and doesn't understand that we have to pay these people back that let us borrow. It's a borrowing game. You
Right.
get what I'm saying? So I feel like what I try to tell the young guys is this, man. And I'm gonna go this way, and I'm only gonna go this route for a reason. Now, the white people know so much about credit is because their family put them in that position. You get what I'm saying? And they
Right.
put them in there where they taught them credit at a young age by a lot of people don't know. If you add your kids to your credit cards, right?
They get
At
your
14
credit
years
history.
old, they get that credit history. So if they're 14 years old, they get 18, they got 4 year credit history already. So just imagine a 18-year-old that don't know nothing about credit, has zero credit, no credit, and then an 18-year-old that their parents put them on a credit card for 4 years when they was 14, and now they got 4 years. They have a totally advantage. You know what I'm saying? So
Right.
it's like they have more advantage than us because their parents put them in position to win. A lot of times is in our society, well, in my society, growing up, that my parents, probably didn't really know too much about credit. So when she messed her credit up and stuff like that, as my older sister was getting older, guess what? She was putting lights and things in their name. So already we on the bottom. You get what I'm saying? So we already trying to fight. You know what I'm saying? We already against the grain. And I feel like if we start now and we start just learning YouTube and things like that, we could change that around. But it's just not going to take me. It's more than just me. You know what I'm saying? I just feel like we got to start helping the community more. And I feel like credit is the powerful tool you can have in this world because everything is based off credit. You get what I'm saying? Everything is based off credit. You go get an apartment, you got to run your credit. You go get a car, you got to run your credit. You got to get a credit card, you got to run your credit. You got to, rent a car, you got to run your credit. You know what I'm saying? Everything that you kind of have to do has to be tracked by who you are. You know what I
Right.
mean? In words of credit. You know what I'm saying? So it's just like now, and another thing too, if you don't have bad credit, guess what? You might could pay your bills on time, right? You might could pay all this on time, but you don't have anything reporting to the credit bureaus to let them know who you are. So even if you have the funds and you pay everything cash, cash means nothing because a lot of times cash is not a paper trail. You get what I'm saying? So a
Exactly.
lot of times is people are paying triple and quadruple it. So the clients that I'm getting never had credit, or they had credit, messed it up. They have bad habits. So I'm trying to break the bad habits to help them get in that house, get in that car, get the credit cards and things like that. So it's just like it's a cycle. You get what I'm saying? And it's like I'm glad I got the chance to talk about this podcast with you guys because when I start talking about, a lot of people are visual. You get what I'm saying? Not everybody can read something and understand what credit is. Maybe they need me to talk and explain a video and things like that so they're able to understand. So I feel like this podcast will help a lot of people. I'm glad you guys doing what you guys doing. But I feel like we have to start somewhere. You get what I'm saying? And one of the things is we have to start educating. You know what I'm saying? Because we don't know. We just think, hey man, I go holler at Jay, man. Jay gonna fix my credit and I'll get a house. You know what I mean? It's not that simple. You have to stop the bad habits first. You know what I mean? You gotta stop paying bills late. You know what I'm saying? You have to pay your credit cards off under 30%. You know what I mean? It steps to get to that good credit score that everybody wants. But a lot of times we have bad habits on top of that where we're just going to a credit repair guy or we just trying to fix our credit to get one thing. We don't have long-term goals. You get what I'm saying? So a lot of times we just want that. You know what I mean? We're just satisfied with that. And that's kind of bad because what happens now, you got to come after you get that and you don't care about credit no more and you want another opportunity to go get something else and you mess your credit up. Now you got to come back with the cycle. Well, if you kind of break that cycle right then and there, I feel like it'll help a lot of people. And I've been blessed enough to help thousands of people, man. And I love it. I love it because you can't always help everyone. You know what I'm saying? But I like how the position is able to help people and they understand it because they be so blind with credit. You get what I'm saying? Like they just, like I told you before earlier in the conversation, they think just you repair their credit, they got good credit. But that it steps towards that. You know what I mean? You got to fix the credit, build the credit, and keep it going. So that's kind of my whole thing. I just feel like I wouldn't really call it a generation curse. I just believe a lot of people don't know. We're just blind.
Exactly. So then the point system, like between different credit bureaus, right? Some people don't need the first two, not even the third one. So so how would you like explain to somebody the differential between the credit?
I'm glad you said that. So you got 3 credit bureaus, okay? Let me fix my camera. You got 3 credit bureaus, right? You got Experian, right? That's like the Godfather, right? You got Equifax, that's like the mother, right? And then you got the little brother, little sisters, that's TransUnion, okay? A lot of car dealerships and homes pull from Experian and Equifax, okay? Now TransUnion is like the little brother, that's the store cars. That's like the Macy's, that's like the what you got over there, Macy's, Dillard's, and things like that. JCPenney's, Victoria's Secret, they kind of pull from TransUnion, okay? A lot of times people go they pick the Credit Karma, okay, to look at their scores. With Credit Karma is not always accurate, but it's always good to keep because number one, they're free, and number two, they tell you updates and things like that about things, accounts that's been removed, why your score went down, why your score went up. So that's another thing. And then guys, if you want to see your credit scores, if you want to see all 3 credit scores, go to www.creditchecktotal.com. Okay. It's a $1 fee for 7 days. Before the 7 days, just cancel it to the free service. That's how you're able to get all 3 of your scores. Okay. Now you always use Credit Karma because, like I told you again, but it's free, but they don't show you the experience score. So a lot of people kind of, my credit score, Crown Karma score is this, but in reality, that's not really accurate, but it's always good to keep because they use a different scoring module. You know what I'm saying? So I love Credit Karma because it gives you a whole insight of why your score dropped. It'll tell you exactly why your score dropped. It'll give you the whole breakdown. So that's basically the scoring thing that I use. There's other websites out there like Credit Check Total is basically Experian. That's just like the third party. So I'll usually get my clients to get them because they charge them the $1 fee. Now you got Experian.com, which is charge you $29.99. You got IQ. You know what I mean? There's a whole lot of, you got Score Sense, but I typically use Experian, which is Credit Check Total, which is Experian.
Yeah. So now the differential. Now I know it's just actually it's different. I found out too for a car that they check different beacon scores that will say if I'm going to get a business loan, it's not the same score they will use if I'm trying to go for a car loan.
All right.
Either.
So like you say that, so it's different mix in credit. Okay. You got installment credit, you got car credit, you know what I'm saying? You got credit card credit. You know what I'm saying? There's different type of mixture of credit. So kind of like the installment is kind of different because that's like personal loans, you know what I mean? Personal loans like that you get, cash advance and things like that. That's more of like an installment. Okay. Car loan is different. That's why I usually tell people on a car loan, you can have good credit, but no car credit. You get what I'm saying? Yeah. It's crazy because you can have a 700 and something credit score all around the board, but if you don't have no car credit, you're still thin file. You get what I'm saying? So now they like to give you in the first time buyer things and things like that. That's why you have to be very careful. But what I usually tell people, man, and I know this on this topic is build a relationship with a credit union. Okay. The reason being, once you build a relationship with a credit union, they're more for the people, okay? And the credit unions, a sample is like Suncoast, Navy Federal, Mid Florida, PenFed, you know what I mean? PenFed. I don't know which ones you got out there. Miami got some out there that's pretty good too. But build a relationship with a credit union. They more for you. They help you. They're owned by the people, okay? Now, when you go to the corporate stuff like Bank of America, it's all about the dollar. You know what I'm saying? They're not really trying to help you as much as a credit union. And then when you try to car shop, being that you talked about the car credit thing, when you car shop, always go through your credit union because they pull your credit one time, okay? When you go to the car dealership, they run your credit, okay? So when they run your credit, they hit you with all these hard inquiries. So you have to be careful because one hard inquiry stay in your credit for 2 years.
Exactly. So now, speaking on the hard inquiry and a soft inquiry.
Okay.
Describing more between a soft inquiry and a hard inquiry on your credit report, and what does it affect? What does soft credit affect? What do the hard credit affects?
Okay, so hold on, let me fix the camera. So you got hard inquiry. That's basically when they actually pull your credit from all three bureaus, like a car place. You know what I'm saying? Now, soft, like them are hard inquiries. Each hard inquiry is taking usually 3 to 5 points off your credit. So when you apply for a credit card, that's considered a hard inquiry. When you go get in a home, that's considered a hard inquiry. When you go get an apartment, that's considered a hard inquiry. The soft pulls are mainly like pre-approvals. You know what I'm saying? Like when you get pre-approval letters in the mail, things like that, them are soft pull. A lot of people say they do soft pulls, but be very careful. They'll say they do soft pull just to drag you in there because they think it's not going to hit your credit, but a lot of times they try to sell you something. So you gotta be very careful. I always tell people to do pre-approval things online. So if you're going to try to go to get a car, always make sure to say pre-approval. When it say pre-approval, them are soft inquiries. They don't do anything to your credit. It's just like a soft pull where they're just trying to see how your credit. They're not looking in details. And details are hard inquiries. They're really going inside your credit profile. So that's kind of like the difference between hard inquiry and soft inquiry. It's soft inquiry.
Got you. So, okay. Now, so you had a client come to you and they want to buy a multifamily home.
Right.
The credit isn't perfect, but then again, not great either.
Right.
What would your steps be to help that person be able to get approved or approved for that particular type of loan? Because that's the loan from basically from a home, residential home loan.
Okay. So good question. So basically, it all depends on that. You know, what I usually like to do is a consultation, right? So I'm gonna just give you an example of my process, right? If you coming to me, let's say you coming to me, Mr. Fred, you coming to hey Jay, man, I heard you was the man. I'm trying to get a home. I want a home and da. This one I'm up against, blah, blah, blah. The first thing, even though I'm gonna take your word, but being that I own a business, I want to be able to help you 100%. So what I'm gonna do is a consultation. I'm going to sit down there and look at your credit profile, right? I'm going to analyze everything. A lot of stuff, I make sure you don't have any collections. I make sure you don't have a lot of hard inquiries. Now, you might have credit cards, but they're over 30% is hurting your scores. So there's a lot of things that play into perspective to get that person at home. Different lenders have different qualifications. Some lenders credit score they want to look at and see a 620. Some want a 630. Some want to see a 650. So it depends on what type of lender are trying to qualify you. You know what I'm saying? So if you say, hey, look, my lenders say I need 630, I got a 620, I got a 600, I need 20 points, man. What tips can you get me to help me get to the next level? You know what I'm gonna do? I'm gonna tell them like this. I'm gonna say, hey, look, man, I got 2 accounts that's gonna pre-approve you for 5,000 line of credit. Okay, just say they over 30%, they like 50%, and they can't pay $2,000 to $3,000 on their credit card right now to get them under the 30%. I got 2 companies that's gonna guarantee them 5,000 line of credit. Okay, so if they add these 2 companies on their credit, that's gonna basically give them 10,000 available credit on top of the available credit they have now. So then now that'll bring them under 30%, and that'll boost their scores. 9 out of 10 times they'll get that 20 to 50 points right off that. You know what I'm saying? So it's different factors. You know what I mean? What I used to like to tell people is always be under 30% of your credit, because that credit usage is 30%. Paying on time is 35%. You all right? Right then and there, you do them 2 things, that's 65%. New credit is 10%. Miscellaneous credit, like that's everything all around, that's 15%. Right then and there, that's 100%. You know what I'm saying? So if you do the main thing, paying on time, keeping things under 30%, that's already 65% of your credit score.
Gotcha. So now, piggyback off the score. Now, some people don't know the difference. Say I'm a business owner, and I'm trying to get a loan to expand my company, but my business credit is not as good. It's good, but my personal credit is not good. So help people figure out the difference, because some people think I got business credit, I'm good. I don't need no that. But your personal credit also has to play a part when you also get a loan if you own a business on the LLC. You see what I'm saying?
Right. So
and that difference between that business credit and your personal credit, and how it affect you when you're trying to get a loan to expand your business.
Right. So that's another good topic, man. I get a lot of people that say, hey, man, I own this, they have $1 million companies and things like that. You know, they very successful with that. And I love that. But they always forget about their personal, because they think they could get by with the business. Now, if you do it the right way, you can, right? But here's the thing. When you go into Citibank and you trying to get a loan from Chase Bank and Bank America and stuff like that, they still want to pull from your personal. You know why? They want to see who are you. They know your business is doing good. Your business is bringing in all this money, That's good. But you still consider they want to pull and see who you are from your business, because your personal credit tells you a lot about yourself. You get what I'm saying? Right. So if you don't have decent personal credit, they're going to deny you, even though your business probably make all this type of money. You get what I'm saying? Right. So it's one of the things where is you still need to work on your personal credit. Okay. It's some people though. Now, don't quote me on this. It's some people that get away with their business because they built their business so strong. Okay. But when they did it like this, they added all these tier 1 accounts like Quill, Granger, Summer Supplies, Nav.com. They added these tier companies to help them start building their business credit. Okay. And then from there, they went to Staples, Sam's Club, things like that. So they taking baby steps to build their personal, where they don't ask for your personal information. They just ask for your EIN number, which is your employer identification number. You get what I'm saying? But when you start getting to the tier 2, tier 3 method of trying to get business loans and things like that, they're pulling from the personal to see who you are. So you always still want to fix your personal credit when you're still doing business credit. The only reason why I love business credit, because there's no top off. Okay, you know what I'm saying? You can reach, the sky's the limit. Business credit, personal credit is only gonna let you get so far.
Yeah.
I'm gonna do a live real quick. Give me 1 second. How can I send this link to my live so that the viewers could jump in?
The best way to do it, scream at the same time you're doing it. Just put your face on it on Instagram there. They'll do it that way, because we're the link right now. So that was the live stream at the same time, so they can see you, and at the same time they can hear what you're saying back. So it's still the same concept.
So still just go live on Facebook and just
yeah.
Let me see if I can get you the Facebook Live link now.
Yeah, see if you could send that to me really quick because I know people are writing me, asking me about the live right now.
Sure.
Yeah.
Is it the one you sent into the DM on Instagram?
No, that's the Instagram. That's the one for you.
Okay.
The one that I sent, forwarded to you through the picture with your picture at the bottom of it. That's the link. That's the link for the Facebook Live.
Okay, let me see if I can. If you could send it to me again because it's connected through the picture. Yeah, I can't copy it through there. Hold on one second. Let me try to.
We probably do it. I type it in, then I copy that way. That's how I do it.
Okay, I think I got it. Let me see. I think I got it. Well, that one take me directly to our post. It don't take me directly to the.
Oh, so if you they want to watch on the Facebook page, tell them to go look up the George and Fraser podcast and go on our Facebook page and we'll see it there.
All right.
I got a question for you also.
Okay.
Okay. With a business account, what are some good trade lines to start off with to open a business account?
All right, you got quill.com. Quill.com. All right, nav.com is basically, you have Experian.com that pulls your personal credit. Nav.com is basically the credit reporting agency for business credit. So always remember nav.com, NAV.com. They're going to charge you, I think it's $29.99 a month, okay? They're going to report each month. But remember, I'm going to give you 4 lines of credit that's going to help you out. You got summersupplies.com, you got quill.com, you got granger.com, and you got I said Summer Supplies is one. You got uline.com. Okay. Now these 4 tier 1 accounts, you have to buy something a minimum of like $50 on these accounts, okay? Now remember, on business credit, it takes about 3 months for it to post. So don't think it posts like personal credit. It takes a little bit longer for business credit. But long as you got 4 lines of credit, you're able to establish a PEDX score. Okay, PEDX score is basically like another credit score for business. Okay, and then you'll get a DUNS number and all that. DUNS number is free, guys. Don't ever pay for the DUNS number. But once you get them 4 lines of credit, now you'll be able to have a credit score. Now you could go ahead and apply for like a Sam. We got Sam Club with basically like Walmart. You know what I mean? It's like Walmart. You apply for Walmart. You know what I'm saying? You could apply for Staples.com if you in the office and buy whatever type of things you is. So them 4 lines of credit really help you start building your business credit. And then once you start building it, if you already have a business account with your bank, right, and you're already getting money coming in, money coming out, apply. Once you start these posts on your account, apply for a business credit card with your bank that you already been doing business with.
Nice. So you go back to the DUNS number. Can you like clarify the DUNS number?
So DUNS number is basically another type of number that's for business. You know what I'm saying? Like a DUNS number is basically like employee. It's like basically your business ID. You know what I'm saying? A part of your business ID other than the EIN number, which is employee identification. Okay, it's something that a lot of businesses ask for to see what type of other lenders are doing business with you. Okay. So a lot of lenders pull from DUNS, and that what DUNS is basically another reporting, basically agency that they see whatever type of lenders are doing business with you.
Nice. So you got the link for to send to them? You got it yet?
Now, I'm working on it, but while I'm working on it, let me ask you the question. Can you explain the difference between FICO 10 and what's happening now, how they upgraded from FICO 8?
So I haven't really got too much in details with the FICO 8, FICO 10, to be honest. I just know FICO 10 is kind of more stricter on the regards to now. It supposed to make your score go higher, but a lot of times it is lowering people's score because a lot of accounts from that you have from FICO 8 is holding more weight. You get what I'm saying? Like before, prime example, right? if I had a client that didn't have anything on their credit, right, and I was able to build their credit, I'll get them to add one line of credit, right, with the MyJewelClub.com. When I usually get them to add one account, it used to boost their credit directly to the high 700s. You know what I'm saying? Now with FICO 10, it's not doing that anymore. Okay, FICO 10 need more accounts to help you, basically build that credit up. You get what I'm saying? Now FICO 10 is a lot harder. They're trying to make it harder now. You know what I'm saying? Because FICO 8 was so easy to help you, build your credit up, that now FICO 10 is making it more difficult for you. But it's still the same concept as far as credit wise. It's just more things need to be adjusted. Like, you still got the 35, you still got the same measurements as far as, credit usage, late payments. That still hold the same weight. Now, the thing that I think that changes mainly on FICO 10 is it got more stricter.
Gotcha.
Right. Okay. So what are some of the issues you find your clients are struggling with?
The biggest issue, man, with clients, man, is patience. I would say patience because, like I told you, a lot of clients don't understand the severity of their credit report, like their report. They don't understand, if you got 2 to 3 evictions and you got 2 or 3 repossessions, that's going to be harder than the 35 process to see major results because you have way more debt. You get what I'm saying? So a lot of times is these people not understanding like, oh, I go to him, I'll be good in 35 days because he got this person in the house, he got that person in the car, he got that person high limit credit cards. So remember, each client is different. So a lot of times is bad habits is difficult and not understanding how credit really works. That's the most difficult thing I have with clients because they don't understand the main concept of credit. Okay. So when they don't understand with credit, they don't know how to follow the credit. Credit is like chess. You get what I'm saying? You gotta play the game. You know what I'm saying? You gotta play the game. Now the credit game is trying to make money. Okay, so I know they're trying to make money. So prime example, if they give me a credit card for $5,000, right, and they want me to max that out because they don't make money of me paying them back $5,000. They make money off interest. So you always got to keep in mind if it's a game. So when the due date comes, I'm paying that credit card off in full because I don't want to get hit with the interest.
Right.
So it's like you get what I'm saying? It's like some of my clients don't know the game. So they just think like, oh, they give me a credit card. Oh, wow. I could just, you know what I'm saying? I could just, then when I go to 35 days and I look at their credit report and I see they over 30%, I'm like, damn, I told you have to have this under 30%. Yeah. Because remember, credit usage is 30% of your credit score. Paying on time, and then another time is too, they'll switch a credit card or a debit card, right, from their payment, and guess what? They'll get a late payment.
Exactly.
Now if you get one late payment, it can hurt your scores 30 to 100 points. Just one late payment.
Right.
So if you battling that, and you battling clients that don't know how to keep their credit cards under 30%, it can be very challenging.
That's true.
So that's why I always try to kind of like, that's why I love what I'm doing, because I'm not only fixing your credit, I'm teaching you how to keep it that way. Exactly. Keep it under 30%. Pay your bills on time. You know what I mean? You can always, like I tell people, we all have rainy days. We all have emergency where we need to use our card. You can always max your card out, but in that due date, pay it. You know what I'm saying? Like if you need to use that for that month to go get a new train, you know what I mean? To go get new tires and something like that happen, use it. But remember, on that due date, you got to pay these people back their money.
Exactly.
You know what I'm saying? So a lot of us got them old habits where we borrow, we don't like to pay back.
Exactly.
You know what I'm saying?
I ain't paying it. I'm paying this month.
Right. So that's kind of like, that's kind of like the trouble that I have. And then I have some clients, they have $1 million dreams. You know what I'm saying?
Right.
Got $1 million dreams with little pockets sometimes, and I'm just being realistic. You get what I'm saying?
I just
Sometimes you gotta crawl. Go ahead.
I just emailed you the link for the live show. So,
Okay. Okay. Cool.
but go ahead.
Sometimes you gotta walk before you. You know what I'm saying?
Right.
You know what I mean? Sometimes you gotta crawl before you walk. You know what I'm saying? So, all right. Let me see. Oh, I got it. Yep. Cool.
Okay.
Give me 1 second to post this on here.
Absolutely.
But yeah, other than that, I can multitask. So whatever question you got, I can still talk.
Well, everyone for you. To go back and clarify the debt to income ratio. Now, most people don't understand between debt to income ratio versus business credit versus personal credit. Can you tell them how that affects them if you're going for a business and if you're also going for personal? The debt to income ratio.
All right, so let me make sure I'm understanding this right. So debt to ratio, right? As far as the business side, right?
Yes.
Depending on what they're trying to do, what are they mainly trying to do?
Most business try to expand or actually get a loan to improve or improve their company.
Improvement loan or a loan to help bring income in to grow the business. They always look at that debt to income ratio even for the business.
Right. So I don't remember the actual number that they look at, because underwriters really look at a certain amount of number, right, to make sure you're not at that. You know what I mean? So prime example, in my situation, I had so much available credit, right? I like on my personal that I'm like 2% usage on my personal. I have so much available, but they still looked at me as I was a debt ratio, because they like, damn, you have all this available credit, even though you have it, but you're not using it, which I thought that is good to have. Yes, it's still good to have, but it was hurting me some aspects because I was trying to get more, and they were looking at like it's a risk because you already got the, you know what I mean? You already got this much money out there and you're not really using, you know what I'm saying? So a lot of times they want to see you using that money, and they want to see that money coming back. So if that money is not coming back fast enough for them, is a risk. In other words, if I'm answering your question right, it's a risk. If they don't see the money, like if they approve you for one loan, right, and you probably got the 10-year loan thing, and you're making just the minimum payments, right? So if you're going to try to ask for a bigger loan, they're not 9 out of 10 times they're not going to approve you, because guess what? You still owe so much money on this one loan. So why would they give you out another loan when you're not really paying? You're only paying the minimum. A lot of people think they could do that, but they're not. That's not the way you play the game. Okay, you play the game where you make a lot of payments on that loan, right? So they can see that, and when they see that, now they're like, oh yeah, he's paying me back. He's paying me back faster than the agreement is. So yeah, let's give him this loan. Okay, so if they look at the debt to ratio and see that, hey, look, this is a 10-year mortgage, but you're trying to hold on to the, you know what I mean? You're trying to hold all the way through. Yes, they're still going to make money with you, but they're not going to try to give you another loan on top of that.
Right.
That's true. I got a question for you. If you send a letter to the credit bureau for a dispute account and they tell you they won't investigate it, what would be your next step?
Oh, you have to. So it's all. So a lot of times we don't know the laws of the credit. It's so many laws. There's the Fair Credit Reporting Act, where it's for us. It's for the consumer. You know what I mean? It's for the client or whoever the person is. So a lot of times, if they're not going to investigate it, by law, they have to remove it. If they can't prove this debt is yours, it has to be removed. Okay, so if they're not going to remove it off the second step and things like that, they're going to say it's validated. A lot of times they say it's validated with no validation.
Right.
You get what I'm saying? So if they're not showing you no validation, now you can play a play game with them. Now you can intent to sue. Now you can contact the Better Business Bureau. You know what I mean? That's the Better Business Bureau is basically for us. They like our lawyer. You know what I mean? They're gonna fight for us to remove this thing. You know what I'm saying? So there's a lot of, you gotta know kind of like some of the credit laws and some of the consumer law. You know what I mean? For the people. So if they're not trying to remove it, it's other ways they can remove it, because they got all types of Fair Credit, Act laws for us and perspective to do that. Because by law, if they can't provide this debt is yours legally, they have to remove that debt.
Right.
If there's not a wet signature debt, a lot of times they're not going to have the wet signature. You know what I'm saying? Because they sold this debt to this person, Pro Collect, or whoever. You know what I'm saying? So they're not gonna have that original document. If they don't have that original document of you signing, they have to remove that debt.
So that's what a wet signature is, just so all the listeners and fans that are listening to the show. It's the original document that they have to prove that you signed for this document and this document is yours.
Absolutely. Absolutely. Because like I say, you got so much fraud going on around here that anybody can put that account in. You know what I mean? They
Right.
can't really justify that that's you unless they have a wet signature with your signature that match you. You know what I'm saying? So
Right.
if they don't have that, you could challenge it. You could challenge it. You know what I'm saying? So it's one, I'm trying to fix the camera. Sorry. Yeah. So it's one of the things where you can challenge it all day.
Yeah. So,
It's just that we don't have. That's again when I say we don't have the patience to fight with them. You know what I'm saying? We want to give up so quick. You know, we want to put down one round of dispute letters, and then we don't remove it. You know, we giving up.
exactly. That's true. But let me ask a question. So, say a person, now here's the thing they have to do with bankruptcies. That's one of the things now, say somebody filed for bankruptcy and they have a statute of limitation on the bankruptcies they're on credit for so period of time. But some banks stop looking after a certain period of time, say maybe 3 years, whatever, and they will give you a loan, but with a higher interest rate. Like,
Right.
what would you guys do? Like, say, and also, so part of the question is credit bills. They also play a part too. Like, some people say to pay them, some people say don't pay them because they're not the original debtors. So,
As far as the collection, or because I think you asking two questions. As far as the collection
yeah,
or the bankruptcy, which one you want?
you thought bankruptcy first, then we'll go into the credit bill.
All right, cool. All right, bankruptcy. They don't report. If you have a bankruptcy, they don't report to the credit bureaus, okay? I'm just letting you guys know. What happens is a third party reports to the credit bureau. Remember, it's third parties that sell out information to the credit bureaus.
Sure.
You know what I'm saying? So they sell out information, and then that's how they report that public records we have a bankruptcy. So being that I'm in the credit where I know this, a lot of people don't know this. So if you don't know this, you don't know that you can get the bankruptcy removed because legally they don't report to the credit bureaus, a third party. So what you do is you write your bankruptcy that whoever you have the bankruptcy, what are your validations of reporting to the credit bureaus? Okay, you keep it short and sweet. You know what I'm saying? What are your can you send me back a letterhead? So you have to send them back a mail to return address to your address. What they're gonna do is send you an official copy of it. Like it's gonna be a stamp from the courthouse itself, from the credit bureau you already have it at, that say they don't report to the credit bureau.
Exactly.
So now you use that letter to fight with the credit bureaus to get this removed because now you're gonna say, hey, look, the bankruptcy people, they don't report to you guys. So how are you guys getting this information? You know what I mean? So now you have a way to battle with them to get this removed because they don't post a report to the credit bureaus. You get what I'm saying? So now they're gonna say they don't. You know what I mean? Now you got something to get that bankruptcy removed.
Right.
Gotcha.
Once you move it off one credit bureau, since they all work together, they got to remove it off three. It's just that you got to keep maybe fighting with Equifax and TransUnion if they removed off Experian. The thing is, we give up. You know what I mean? We don't want to go the extra 2 to 3, 4 steps.
Right.
So that's on the bankruptcy side. Now they say after 7 years, that if I'm answering your question, after 7 years, yes, they don't look at it. Right. After the statute, limitations, they don't look at it. Just like a collection, right? But here's the thing, too. For a collection, now, I always tell a client never pay a collection. That's just me. Because here's the thing, original credit.
Went right to the question I was going to ask you.
Right.
Right to it.
You never pay a collection because here's the thing. They're going to sell this collection to Tom. They're going to sell it to Jerry. They're going to sell it to Tim. By the time they sell it to Tim, each one of them persons are getting that debt cheaper. Right? Yeah. So now you remember, you still got to pay them what they think you owe them.
Mm-hmm.
So now 9 out of 10 times they sold it cheaper. Now you're paying them the full payment. So now they made money off that debt.
Gotcha.
Makes sense. But then again, remember this. It's going through all these people. They don't have that original document.
Right.
So how are they going to prove this debt is yours?
Exactly.
So that's why I always tell people to just keep fighting it until until you in a situation where you like this, like you this close to closing on your house, right? And you just got this one collection just stopping you. You know what I mean? There's one that's stopping you from the approval. I tell my clients, go ahead and settle with that.
Right.
Gotcha.
That's the only time I tell them to pay a debt on collections if it's one debt. You know what I mean? It's one thing stopping them from getting that dream home.
Right.
Gotcha.
But other than that, if it's I'm going my bad, I'm going live real quick. But other than that, no, we don't play no collections over here.
Okay. Now, I don't know if they answered the question or they asked you the question. Hard inquiries. You
Yeah.
know, you're watching YouTube and people be like, "Oh, I can get hard inquiries off in 15 minutes." You know, I've done some of the writing myself in letters for my own credit, and I know that it takes at least 30 to 45 days from writing them. They have a certain amount of days to respond, and so
35 days.
yeah, certain amount of days to respond, conduct an investigation, so forth and so on. So where are, well, is that I can get a hard inquiry off in 15 minutes? Is that really a scam or is that just somebody that wants you to watch a video?
All right, so I'm gonna be honest with you. All right, so I'm sorry, guys. I just jumped on this live late. I've been on the live with the podcast. We've been on here about 40 minutes, man. I'm sorry, but we're talking about credit. But to answer your question, yes and no. Okay, now yes is like I wouldn't say a scam. It's just it's for something you to grab your attention fast. You know what I'm saying? So they want to grab your attention fast so you can click on it. You know what I'm saying? But can they take it off in 15 minutes? No. To answer your question, no on 15 minutes. 24 hours, 48 hours, yes. Okay. Now, what I seen to work, and I did this myself, and I did this for a client. I had clients do it. It only works for experience, right? You call them up and you dispute it with them, but you only could dispute it on the fraud department. But be
Right.
very careful on a hard inquiry, okay? If you have a hard inquiry that has a positive account that you got that hard, like they approve you for something and it's recent, if you fight that hard inquiry off, 9 out of 10 times they're gonna close your account.
Okay.
So be careful of that. Now, prime example, let's say you went to the car lot. They ran your credit 15 times when the one guy said he only ran it one time. Yes, they ran it one time, but they seen through all these lenders. You get what I'm saying? So
Right.
yeah, they ran it one time, but they're not telling you that it's different type of lenders trying to approve you for that car. Want to take that, you know what I mean? Want to take that approval. So in that case, if that happens, yes, the next day I'm gonna find out, hey, okay, Wells Fargo approved me for the car, and I got Santander, all these other lenders on there, ran my credit. I mean, and then them hard inquiries sit in there because even if I have a good credit score, if I have too many hard inquiries, guess what? I'm gonna
Sure.
get denied in the future. So I
Right.
know by being in the credit world. So I'm gonna call Experian. I'm gonna say, hey, how you doing? I just checked my credit. I noticed some hard inquiries that I didn't authorize. Simple.
Right.
I didn't authorize these hard inquiries. They're gonna say, hey, did you do a police report? Yes, I've been, whatever. I've been a victim of identity. A lot of times you've been a victim of identity theft, okay?
Right.
Or someone stole my wallet in the past or whatever. Did you file a police report? No, I just want to get these resolved. I want to get these inquiries disputed. Okay, this works with Experian only. Now they're gonna ask you what was them hard inquiries are, right? So now you're gonna list all them other 14 other than the Wells Fargo, because you know Wells Fargo approved you for that car. And guess what? You're gonna check back tomorrow morning, and all them hard inquiries are gonna be off.
Oh, okay.
But it
Well, I
only
mean,
works for Experian. But now
right.
when you're dealing with TransUnion and Equifax, I was able to finesse them kind of sometimes. I have to argue. I'm very argumentative sometimes. When it goes to my personal credit, oh yeah, I'm gonna argue with you. I'm gonna ask for the supervisor. You know what I mean? I'm gonna make you until you can't do it anymore where you gotta, you know what I mean? I just know how to work them because I know, you're telemarketing, you're answering the phone. Your job is not to do it. You want me to send out documents, but I don't want to wait 35, you know what I mean? I don't want to wait 35 days and let you know what I mean? I want you to put it because now I'm talking to an actual person. A lot of times is when you send out documents, it's never really going to an actual person. You get what I'm saying? So
Right.
it's going through a scanner. You know what I'm saying? So if you're talking to somebody, they got your credit report right then and there on the screen.
Right.
Now they're able to. That's why it works 24 hours for Experian, because they actually putting in a dispute right then and there. Now, keep in mind, not a lot of people want to do this. They want to dispute it online. Online, you're taking away your rights.
Right.
Gotcha.
So never do anything online other than the phone call. You know what I'm saying? Because
Right.
once you're doing online, you're taking away your rights, and you don't
Right.
want to take away your rights. When you put in paperwork, now you got legal documents. You have a paper trail. You get what I'm saying? So
Right.
it's like Equifax and TransUnion are the harder. They're the harder when you got to do the phone call. Okay. Now TransUnion going to tell you they don't do it. I mean, Equifax going to say they don't do it over the phone, which they do, but you know what I mean? You got to go to the supers. I mean, but nobody got time for that. So then that's when you got to do the letters. The letters work. Absolutely, they do work. But sometimes I want that 24 hours with Experience. So I'm going to call them up because I know each hard inquiry takes 3 to 5 points off your credit.
Right.
I know that. Just like I wish I could flip the screen and kind of show you guys screen record. Oh, I actually could show the screen. So I guess later on in the video or later in the show, I'll show you guys what I did. I called Experian yesterday, and I'm glad you brought that up. And I got 4 hard inquiries removed. When I got 4 of them removed, guess what? I jumped up 17 points with just 4 inquiries removed.
Wow. That's really good. Robin has a question here. She said, is it possible? She says, is it possible to have student loans taken off?
Yes. 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 It's 50-50 because remember, it's the government. You still owe the debt. What people don't understand is you can remove it off your credit, the student loans, but you're still legally responsible for that debt. Makes sense? Makes sense? Even the thing is, you want to remove that debt off your credit because that's taken away from your debt to ratio. A lot of people got 30, 50, 60, 80,000 in student loans. So just imagine when you go and get that house, already they taking that away from you. You know what I mean? Your debt to ratio. So you got to be, a lot of people want student loans off because it holds so much value on their credit. But as long as in deferment, it's not going against your credit.
Oh, okay.
Gotcha.
We have another question. I said, Natasha asks, I pay $19.99 a month for Experian to monitor my credit and send me alerts. She's asking if it's worth it.
Yes, but I would always tell on that membership, are you getting all 3 credit bureaus or are you just able to see Experian? Because if you got Experian, which is Experian.com, well, you're just paying for the monthly fee. If you're able to see all 3 credit bureaus each month for $20, I would say keep that. Now, if you're only able to see Experian for $20, I would say cancel it because you could cancel it to the free service and able to just see Experian itself.
Okay.
If you're able to see all 3 credit bureaus for $20, keep it. Is worth it because a lot of times Experian charge $29.99 to view all 3 each month.
Okay. Okay. So, really quick, I want to ask, how do you consult your clients to build wealth using credit? And the reason why I'm saying that is if you look at Fraser and I are in real estate.
Okay.
So we spend time dealing with hard money lenders, dealing with fix and flip loans, dealing with portfolio loans and things of that nature. And we always run into a few things. Either sometimes it's debt to income ratio, sometimes it's leverage. So in other words, like you were saying, on your personal side, you have a lot of credit, so it looks like a risk to you because you're only at 3%. And let's say you have $100,000 worth of credit lines out there. Okay. In our case, if we had $100,000 for credit lines out there, we're using that money for buying properties, fixing and flipping. You know what I mean? Moving throughout.
You moving it, right?
So how do you grow? Like if I just came to you and said, listen, I'm not brand new, but I've been interested in real estate. Maybe I rent one property or I have one house and I want to have 10. How can I use my credit to grow leverage for me? Like I want $100,000 worth of credit lines to be able to buy more houses, put those in my portfolio and things of those natures. What would be some of those steps that you think that
Okay, so the first thing you wanna first work on your credit. You want to able to build that, and I'm gonna tell you how. Okay. First thing to build that leverage when you want to jump in real estate. Okay. Now, say you have the business, so now the business credit is totally different from the personal, as you guys already know, right?
Right.
So in my case, I'm gonna speak for me, okay, and give somebody an insight. So what I'm doing is building a strong profile for me, so I could jump into real estate. That's part of what I'm doing now, right? So
Right.
what I'm doing is I'm already building my credit. Like my credit profile is good. I'm at like 100,000 in available credit, right? So
Right.
I got that just in case if I have to put down a certain amount of 10,000, 20,000, I could put that. I could take that. But why take that from my cash when I could use my credit? Because I
Right.
want to use credit to make me money, right? I don't want to use the money that I made. I want to have that in savings, right? So what I'm thinking is this: what you want to do is you want to build a relationship with a credit union. That's your first thing. You want to build a relationship with your credit union, okay? You want to have money coming in. You want to have money coming out, right? So now in the process of that, just say your credit is okay, right? So now you want to add lines of credit, okay? Now, my Jeweler is going to give you 5,000 line of credit. It's just a line of just check me out though. Check me out. I'm getting somewhere with this, right? My Jeweler is going to give you 5,000 line of credit. Okay. So Fraser, put 5,000 on the side or 5,000 on the put it, write it down for me real quick. Put 5,000, write it down for me. All right.
Right.
Okay.
So I gave you my Jeweler is going to give you 5,000.
Right.
I'm gonna write it down too because I want to get somewhere with this because we got some viewers. I want them to understand this.
Go ahead. I wrote it down. 5.
All right, so we got 5,000, right? So they're
Right.
gonna give you 5,000 line of credit, right? Now write this down. NewCoastDirect.com. They're gonna give you 5,000 as well. So what we got now?
We got 10,000.
10,000.
All right. Now you have to buy a minimum of $100 off my Jeweler, a minimum of $100 off New Coast. Okay. So that's basically you're spending $200 to get access to 10,000 available credit.
Right.
You follow me?
Yeah.
Now, AG Jewelry, let me get this website right for you too. AGJewelryDesign.com is going to give you 10,000 available credit. You just have to spend $150.
Okay.
All right.
So you're at 20,000 now. You had 20,000, and you have to spend a minimum of
350.
$350.
Right. So I got some more for you. I got one more. I got two or three more for you. All right. So let me get it. Give me 1 second. GetThatJewelry.com. They're gonna give you 7,500 to 10,000. Bless me.
Bless you.
Thank you.
I put 10,000.
All right. Now, Shop Simply gonna give you 8,500.
8,500.
Where we at now?
20 plus to 10,000. That's 30,000 plus the 8,500. You're at 38,500.
Who's gonna give you that right now with bad credit, no credit?
That's true. That's absolutely true.
Right. So now you have. Now I know this different because these like store card accounts, but understand the concept. You're already adding a strong credit profile now. You get what you following what I'm at now?
Yeah.
Right.
So now, write this down. CreditStrong.com.
Go ahead.
You can get an installment loan for $18,000, right? Now, this is basically like a savings account, right?
Right.
But you're going to pay a monthly fee like $100 something a month, right?
Right.
They're going to put this all in the savings account. So now you're already building an installment loan on your credit, right? So now you can either add this or take that off of what we're trying to get to. I just want you to understand the concept, right? So now you have these lines of credit that you just built $38,000, right?
Yes,
and
sir.
you probably invested what, $400, $500?
Uh-huh.
Right. So now this when you start applying for credit. You following me? The reason
And so
why,
you're talking about Chase, you're talking about Bank.
right. I'm talking about the tier ones, Chase.com, Amax.com. You get what I'm saying? BankofAmerica.com, Navy Federal. I would have been to apply for Navy because Navy pulled from Trent. I'll talk about that topic after that. Don't make me forget about Navy Federal, okay? All right. So now you got these tier ones, right? You got all these tier one banks now. They're gonna see My Jewelers gave you 5,000. New Coast gave you 5,000. Shop Simply gave you 8,500. AG Jewelry gave you 10,000. You get what I'm saying?
Right.
Hit that up, gave you 10,000. What they gonna give you?
Right. It
Credit.
could be up there, 15. It could be 15. It could be 12.
What they gonna give you? Or 10, 5, 7.
Right.
You get what I'm saying? So
Right.
now you invested $500 to get you access to 7,500.
Right.
Gotcha.
Right? Unsecured.
Right.
You get what I'm saying?
Yeah.
Now you start building a relationship with every bank. So let's say you're gonna build that relationship with Chase, right? Or let's say you're gonna build that relationship with Navy Federal. So now you build a relationship with 2 banks. Guess what? Have money coming in, have money coming out, right? So
Right.
guess what? When you when you building that real estate portfolio, you following me now?
Right.
Yeah.
Credit profile is getting stronger. It makes
Yeah.
sense. And now you're able to ask for a loan.
Right.
When you ask for a loan, they're gonna see your portfolio is built pretty good.
Right.
And then make sure you have like it has to be able for the bank to win too. You know what I'm saying?
Yeah.
So make sure you have the paperwork right of the home you're trying to get, and make sure you have, what the home brings in. You know what I mean? You're trying to do a flip and flip, whatever. Make sure everything lined up. If it
Right.
lines up, they're gonna give you that loan for that house.
Right.
Yeah.
You get what I'm saying? They're
Right.
gonna give it to you because you already built your credit in place.
Absolutely. Can you circle back and tell the listeners about Navy Federal? It seems
All
like
right.
it's a big one.
Navy Federal is the best bank I ever had. Just be honest with you.
Okay.
Let me tell you about Navy Federal. This is a secret, man. I don't even tell it, but I'm gonna tell you on this podcast. All right, Navy Federal. How you get into Navy Federal is a government, right? Everybody knows Navy Federal is for people that has been in the service. How you get a membership with Navy Federal? You have to have a brother, sister, mother, dad, grandma, grandpa to able to get an account with Navy Federal. Okay. If you have any of those, now you have a stepbrother, stepsister that been in the service, past or present, you still could get a membership with them. If you have that, have their information as far as their name, ID, name, birthday. You're not gonna need their social, what year they serve. You automatically guaranteed a membership. Okay.
Right. Right.
Now once you get this membership, you only have to put $10 in checking, $10 in savings. Now.
Right.
The good thing about Navy Federal, right? Navy Federal only pulls from TransUnion.
Okay.
Now, when you like say prime example, just say you added 1 or 2 of them cards I gave you at first, right?
Mm-hmm.
Once they post on your credit, go ahead and apply for a credit card with Navy Federal.
Right.
Now they're gonna say this person gave you 5,000, this person gave you 5,000. The first card gonna be from $1,000 to 5,000. They're gonna give you a line of credit.
Right.
Right. Keep that card under 30%. It's a credit gem. I don't really tell too many people this unless my clients. You know what I'm saying? Keep that card under 30%. Guess what? In 91 days, I want you to double back to Navy Federal again. 91 days. I want you to wait 3 months and 1 day. I want you to apply for another credit card with them. Make sure that credit card that they gave you at first is under 30%. Guess
Right.
what? Now they're going to give you 10,000 to 20,000 line of credit.
So when you say 30%, let's say they gave you $5,000, that means that you have to have that credit card at
So if they give you 5,000, right?
what is it? $600.
You can't spend over $1,500.
$1,500. Okay.
Now you could spend more than that, but in the due date, you have to have it under 30% if it makes sense.
Right.
But if you're gonna go, see, this is why I always say it's important to build a strong credit profile. Because say you want to max that card out, right? And you have all the other credit cards all the other lines of credit I told you to add, you can max that card out because it won't put you overall under 30%. You get what I'm saying?
Right.
So now, but a lot of people don't know that. So I'm trying to get you prevented from getting a bad habit unless you're doing something to make you money with that card. If that card produces income from you, if you need to max it out, I know you're going to pay it off. You know what I'm saying?
Right.
But if you got all them other accounts, just say, all right, so 38. So with them accounts I just gave you is 38,000, right? So we got 38,000, right? And we minus 30%. That means you can't spend over 11,400. So
Right.
if you need to max that 5,000 card out, you're good.
Exactly.
Follow it? We good?
Follow
Yes,
it.
got it. Definitely got it.
So now I just showed you a way to not only get access to 38,000 just right then and there, but I also show you other than that 30,000, 38,000 to get the 18,000, you know what I'm saying? So
Yeah.
now I'm almost giving you able access to 50,000, right?
Right. Right.
And now when I always give you access to 50,000 available lines of credit, I just showed you how to get the Navy Federal 20,000. That's 70,000 available. You know what I mean? That's $70,000. You know what I'm saying? You can have available credit.
Right.
See, it's chess. You know what I'm saying? A lot of people don't want to play chess. You have to
Right.
spend money to make money. Well, a lot of
Right.
people don't understand. So now, Navy Federal, now you built the relationship, say now, in this for real estate. So now they give you 20,000, you've been putting money in and out. You have a proposal on a house that you want to get. You're going to take that house right to them.
Right.
And you show them this. And now they're going to give you a conventional loan or whatever loan because they know you're still going to pay them back. They want to keep all the money in-house. They don't want you to go to bank. You know what I'm saying? They don't want you to leave that. You know what I mean? They want to be your car loaner. They want to be your credit loaner. You know what I mean? They want to be everything for them. That's why I say always build that with that bank. You get what I'm saying?
Right.
So now they don't want you to take that loan to Bank of America, that proposal to Bank of America.
Right.
They don't want you to take that shit to Chase.
Exactly.
It's just that you got to build that portfolio for them. Now, they might not give you a high loan at first because they want to see if you're going to be able to pay them back.
Right.
And with COVID, it's kind of crazy right now. You know what I mean? But they're going to give you something. You just take that, bring that money back. Now they're going to risk. Now they're going to take a risk.
Absolutely. We have a question here from Winnie. She asks, is it good to use credit cards for payments on cars or houses?
Yes and no. Here's the thing, the interest rate. That's why I always say no on that because all right, so in this case, if you have a credit card, now for one, you have to have a high limit credit card if you're going to, well, down payment, yes. I would say down payment, you're not paying the car. Yes, it's good as long as you're going to pay off.
Right.
You know what I'm saying? As long as you're going to pay that off at the end of the month, I would say yes. I would say if you're going to leave that balance on that card, no. Because not only do you have to pay them back, you have to pay interest on that.
Right.
Exactly.
So yes, if you're going to pay it all in full in 30 days, no, if you're going to continue to keep a high balance on that card.
Yeah, because the interest on a house where we're at right now is almost at 3.4, 3.5, and even lower.
Mm-hmm.
You know what I mean? But credit card interest is at 15 to almost 17%. So your balances are off. You know what I mean? If you have $20,000 down payment.
Here's the thing. That's why the credit cards is always a high interest. Always.
Right.
So sometimes it's even better to get, sometimes it's even better. Sometimes the personal loans are lesser than the credit cards.
Right.
You know what I'm saying? So I always say play the game with them. You know what I'm saying? So what I always say is on that question, yes, if you're going to pay it in full in 30 days because you have 30 days to pay that, whatever. Now, even if you pay, you don't even have to pay it in full. Just make sure you're under that 30%. I like under 10% of my car usage.
Right.
I mean, unless I got trips I know I'm about to go out here and things like that, but I'm using my Amex card and I'm just swiping away because they're going to give me 100,000 in points if I spend 4,000 in 4 months. I know I could do that.
Right.
Yeah.
You know what I'm saying? Because bills is, you know what I mean? Why not? I got to pay electric, I got to pay car, you know what I mean? Why not swipe my card? I got to pay that bill at the end of the month regardless.
Right.
Yeah.
You know what I'm saying? So it's like, it's different perks, man. But I always say on that question, yes and no. But definitely yes if you're going to pay it off in 30 days.
All right. I have one more question for you before we wrap. Robin says, when you say another credit card with Navy, do you mean ask for a credit increase or get a
No,
whole new card?
credit a whole new card. They're not going to graduate that card in 3 months. There's no way they're going to graduate. A lot of times they won't graduate that card for an increase after like 6 months to a year. I
Right.
always say a year on that. Grab a whole new credit card. I usually tell people the first credit card to get with Navy Federal is the rewards card. The next card I usually tell them to get is either the flagship card or is an Amex card they have. Now with
Okay.
Navy Federal, you can get up to 3 credit cards with them. Their limit for credit card cutoff is 3.
Okay.
Chase got the 525 rule. Chase got the rule where you can't have more than 5 accounts in 24 months. So always take that and consider it to always get a Navy card and get a Chase because you got to catch Chase before the 524 rule. You don't
Right.
want to miss out on that opportunity with Chase. Chase is a beautiful bank. I prefer Navy Federal too because Navy Federal is a credit union. There are
Right.
more people. Now, Navy Federal has just been able to bless so many of my clients and me myself. That's how I know about them. But
Right.
Chase is a powerful bank, and Suncoast is a powerful bank. Mid Florida is a powerful bank. I don't know what's up. You still in Jersey?
Yeah, I'm still in Jersey.
I don't really know what credit unions are really out there. I got to ask my aunt is out there too. I got to ask her too. But you want to stay. You want to have a good credit union bank. You want to have a good relationship with them. And
Right.
then you have a regular bank like a Chase, Bank of America, things like that.
All right. Appreciate it. She said Atlantic Federal. I think that's a credit union out here in Jersey.
Okay, right. So, if you guys in Jersey, whatever you got, whoever's watching, grab a credit union and grab a tier 1 bank like Bank of America, Chase. I would say Chase because Chase is all over the world. Grab them. If you could get in Navy Federal is all over the world. That's another, but it's harder for people to get into Navy Federal because you need like a family member that been in service, or past service, or present.
Great. Jay, listen, we appreciate it. We appreciate the education. Thank you for taking the time to talk to us. I apologize for stepping out. I had to take that phone call. But
Now you good.
the education that you put on this show, man, is exactly what we need in our community. The people that are, black and brown people, then we need this education because it's not taught in school. Frazier and I always said if we had this education when we were younger and we were investing in this, that, and the third, we'd be millionaires.
Mhm.
But we learned it later by just going through the entire process of
But,
learning, going, oh, this,
but
oh,
you know what? Not to cut you off, but I feel like I'm kind of mad with society. Like we wouldn't learn this in school. But my thing is now let's help our kids
yeah, leave a legacy.
leave a legacy because we're able to help our kids now. The stuff that we know, because remember, credit runs the world. I don't know if a lot of people don't know that. Credit runs the world because it gives you more opportunities.
Right,
People don't understand credit gives you opportunities. If you have bad credit, you're paying triple. How can you ever get up? You know what I mean? How can you ever get on top if you're paying triple for something? Now say you got 5 items, right? And you
right,
playing triple on all 3 of them. That's not fair. You
Yeah.
get what I'm saying? So how are you able to just level out on that? You know what I'm saying? So credit is a major thing. And before we get out of here, if anybody watching my live, man, please, 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 if you have kids and they're young, add them to your credit card.
Yeah.
If you add them to your credit card, find out what banks you have credit cards. Find out the age limit because some could add at 13, some could add at 12. Make sure there's no late payment on there. Make sure it's paid on time. Make sure it's under 30%.
right,
Add your kid when they're 13 years old, when they're 18 years old. The biggest blessing you could bless your kid with is a 700 to 800 credit score. They will have access to cash. They will have access to credit. They will have access to opportunities that it took me 31 years to have these opportunities. They can
right,
have opportunities at 18 years old.
right,
So
right, right.
put your kids in position to win. You know what I'm saying? It's never over. It's never too late. Fix your credit. You need to fix your credit. Come holler at me or watch what I do or listen to me. If you need, advice, ask Fraser, they in investment things, we're here for the people. We're trying to, you know what I mean? I feel like if I can help you, you can help somebody. You know what I'm saying? That's what we're here for. So I appreciate this opportunity, man. If you guys need any credit help, visit my Instagram. It's Mr. Never Stop Credit Repair. Visit my website, neverstopsrc.com. You know what I mean? I'm a regular person. I'm just like, I just took the time to build. A lot of people are scared to step out there. Don't be scared to step out here. You have to take some type of risk out here. You know what I mean? If you don't do it, I'm gonna do it. You know what I mean?
Right.
Somebody's gonna do it. Somebody's gonna take your place. So please take the time to get your credit right so it can open up more opportunities.
Well, listen, we definitely appreciate you being on the show, especially on a Friday. We definitely would love to have you back, you know, um, sometime in the new year so we can discuss a little bit more about recovery and, what's hitting our economy and especially our community, COVID, pre COVID, rebuilding businesses, people that have lost businesses, and things of that nature. So I'm definitely appreciate you being on the show, and we definitely would love to have you back.
I'll definitely back. It's been a pleasure, man. Like I say, man, guys, stay blessed, man. Keep doing what you guys doing. I support y'all 100%, man. It's something that I gotta get into. You know what I mean? I gotta get more time out there when I'm able to do these you know what I mean? Do these one-on-ones to talk to people. You know what I mean? I feel like I need to literally go to different type of schools to talk about credit. You know what
Right.
I mean? So many kids we're missing out, and so many people we can help. You know what I'm saying? And I can help, or you know what I mean? Like this podcast is gonna help. If it help one person, I'm fine. You know what I mean? Because that one person gonna help that. You know what I mean? So I just want to be able to people to understand it's never too late. Just listen and follow the steps. You know what I mean? Everybody's not gonna be a walking miracle. You know what I mean? Sometimes it's gonna take steps, but I appreciate this opportunity, man. And I'll see you guys in the future of 2021.
Exactly.
Definitely appreciate you.
Appreciate it, brother. Can't wait to have you back.
It's all love, man. It's all love, man. Like I said, man, y'all keep doing y'all thing, man. I support it. Just keep, it's a movement, man. Just keep doing what you guys doing, man. It's great how, one side is up here and you all the way, you know what I mean? Jersey to you know what I mean? That's beautiful, man. It shows you what, our world had come into. Everything is basically virtual. You know what I'm saying?
Right. Absolutely.
So I feel like this is a great opportunity, guys. Keep doing it, and I support you 100%.
Appreciate it, bro.
Absolutely.
Appreciate it.
Absolutely. Wow, Fraser.
Man.
That was a lot of information. I wrote a lot of this down. Y'all sitting here talking about this. I'm like, oh, what I missed? And then we all threw the piece, man. The thing about that I'm really excited about is we got this young brother, man, that can relate to us.
Exactly.
You notice a lot of times when we go to churches and we go to a lot of different, I know we're past our time. I'll wrap it up shortly.
Yeah.
But when we go to a lot of churches and things like that, what do? It's very rare that they bring in financial advisors and credit consultants that look like us and have the knowledge that he has. You see what I mean?
Exactly.
Because we're always sometimes willing to go across the street to somebody else that doesn't look like us and invest, certain things, but we don't always keep it in our community. So I'm just so thankful, man, that this brother with this knowledge came on this show, man, and blessed us. I mean, I wrote a book and even I learned some things from
Exactly, right?
I mean, it was just through the roof. So I definitely appreciate him. Listen, we got a great show coming next week. We got our Christmas show coming. I think we have a show on Monday.
Yeah, Monday, Mr. Monk. He's a stunt martial artist. He does movies and films. He's a brilliant guy, wonderful guy. We're gonna love him. He'll be a great guest.
So check us out on Monday at 8:00. This is George.
This is Fraser.
And this is Real Talk with George and Fraser. Definitely appreciate you.
Blessing.
Peace.
Peace.
Mm-hmm.
I think we're still alive. There you go.
Are we still live?
Still alive, yeah. Still alive.
All right, hold on. I thought I pressed the end button. Press the end button on your end.
Okay, there we go.